Hello everyone, this is Teddy Kekstadt from Forex Trading Unlocked, and welcome to our video today, our live Forex trading video. And before we get into it, we just want you to check out our disclaimer. We have the forex-trading-unlocked.com website pulled up, and we're going to go down to our disclaimer real quick. Just want you to take a look at this real quick. And just to remind you that this video is for illustrative and educational purposes only. We are doing it live, however, there is still a lag between the information that we have coming out and then streaming out to you, so remember that. Take that into account. Alright, so we'll put this back up here, and we're going to pull up the dollar index. Alright, so we have the dollar index showing right now how the bears took control right off the bat. They were hammering support pretty good earlier. About, I would say, an hour ago, they were closer to their lows, maybe, yeah, about an hour and 15 minutes ago. Since then, they've come back and they've bounced back above this key little pivot point here, this high that was set a couple weeks ago. It's right on a nice monthly pivot level, and we're riding that right now. Now, what time is it now? It is 10 to 10 Central Standard Time until 1:15 Central Standard Time. We're not expecting very much activity because as we get closer to the Fed meeting, everyone's pretty much got all their eyes on the Fed and what's going on. So that's something you want to take into account, what's going on today, okay? So it's very important to realize that on days like today, especially as we come into the number, if you did have any type of move, typically it will come back, it retracts. Now, I'm not saying that means you should fade every Fed day, the first move, but especially today where you've had a little bit of follow through from yesterday, especially in yields, that's something that is very normal. And now for them to retract, and if you look at pretty much like where the dollar index opened up today, it was right around where the index had been opening and closing for the past few sessions. Now today we are off the lows, but we could very easily be right back to where the opening range was for the day for the dollar index before the Fed release. Now the biggest thing is, what kind of expectations do we have? There's a lot of touting that the Fed is going to become very dovish soon. However, that is all very media driven. We haven't seen the speak from the Fed that says we're done with raising rates. So far the media has pretty much pushed it as the raising rate cycle is off the table, and now they're going to start cutting. Well, the Fed hasn't said that they're going to start. First of all, they haven't cut, and they haven't said that they're going to start a campaign of doing it either. And this is something that the Fed has been very transparent in what it's doing, especially over the past year and a half. So to just assume that they're going to start raising rates, and we have had numbers that have started to come back to show some bit of inflation ticking back up, and that's something that the Fed may want to monitor for a little bit longer. So the expectations on, if you're thinking that they're going to cut, whether you think they're going to cut or do nothing, the expectations are leaning more towards the next meeting for a cut. I think that if going to be a cutting bias, that it's going to lean more towards pushing it out towards May, June. I don't think that in the March meeting you're going to see anything. And that's the other thing too, is you got to remember that it's the end of the month in January. We're going to get through February. The next meeting is in March, so it's not 2 full months away, but it is it's not next month. So we'll be watching what Chairman Powell also has to say next week. But today, as far as what to expect, I would think that if whatever FX pair you were trading earlier today, that wherever it started out the day today, it's very likely that it's going to start to continue to gravitate towards that. The dollar index is reflecting that, and we're going to take a look at interest rates too and see how they're ticking. That's something that is really influencing the FX trade as well. Okay, so now one thing I would like you to do is, if you could, if you're watching this video live, is to make sure that you like and share us, because we're live. We'd like to get some more people viewing, but also hit that subscribe button also. So that would be very nice if you could do that for us. So let's see what else is going on now in the world. All right, so we know what's going on with the dollar index. We had today there was this upward sloping support line that was keeping this corrective rally that we've had, because right now the overall trend has been more neutral to bearish for the dollar index. We came into this sideways pattern over the past week and a half as we head into the Fed meeting. Very common. We did have a buy signal a couple weeks ago, but this is for technically coming into this where it was right at the tip of a correction. It was a very tough area, and that's when the scenario was, if you look at some of our past videos, is that we were talking about that we were probably going to be heading into a digestion phase. We're in it. Now the question is, are we going to break out of it? Now, just because we did come below this line and are below this line right now with the dollar index, remember, by attrition going sideways, we were going to do that. And that's what this market has done. Like, if you look at the low that was set on January 24th, the low was at 102.770 in the dollar index. The low today is at 102.94. So we haven't made a lower move low. That's critical. So if we do take out the lows today, we're probably going to press up, hit some stops, and then probably hit the dollar pretty hard as we head into Thursday's trade. And we'll see how that goes. Okay. All right. So now let's go to a market that we need to take a look at. So we're going to go to the 30-year. So the 30-year is coming off of its highs. It had a nice breakout to the upside yesterday. That is putting pressure on the dollar. Okay, so now this is key. We're coming into a Fed meeting. Expectations are that they're going to cut. When cutting means that rates go down, bond prices go up, 10-year short-term interest rates, etc., they go up in price. They've been going up. The expectation is already there, so we might be in a buy the rumor, sell the fact kind of situation. Obviously, the trend over the past couple of months since October is yields are coming back, they're retracting. We're in a key pivotal area. The Fed has not cut rates. The market has pushed rates back quite significantly since last fall. If the Fed doesn't cut rates anytime soon, especially if they don't do it, let's say until June, well, the market's way ahead of itself. How much further is the market going to continue to pressure rates, yields down until the market actually reflects that the spread on the actual cash versus the futures is getting stretched? And that's where I will be very careful. We'll see what happens. I mean, if they were to cut rates, obviously we'd see another big bond rally, and the dollar is going to get hit really hard. But once again, until they pull the trigger, we're starting to come into this buffer where the dollar, as much as you want to hit it, it's going to be hard to really hit it hard until we get some confirmation from the Fed. So watch that direction. If all of a sudden, especially today after the number, right now you have the bonds are up. Let's see, on the day they are up exactly 1 full basis point. Okay, so right now they're trading at 122.17. 122.17. They were at 121.17 as of the close of yesterday. If they were to go back down to that, they opened at 121.18. So if they go back, think about that. If they go back to their opening range today, that would be huge, because that would mean all of a sudden dollar strength is going to come rushing in. So let's take a look at the actual FX currencies now and see how they're panning out. Okay. Once again, if you haven't hit that like button, go ahead and do that on the YouTube. So, and also we have chat going on also. So if you have any questions during this video, don't feel afraid to jump in and say, hey, can you go over that again or give us a little bit more information on said currency? We are here to do so. All right, so Euro US dollar, we had a head and shoulders pattern on a daily basis that was taken out a couple weeks ago. And we've been trending nice up until Monday. We set a lower move low, but not by very much. And this low here is pretty significant now. Let's make this circle a little bit tighter and make that a little bit clearer for you too. Okay. That should be a little bit better. Okay, so this low that was set here, once again, on Monday is very key. So I would say that if you are playing the long side right now, which especially today, you can see we're up a little bit higher. We made a nice jump up to make newer higher move highs on the day. Now that's key too. See what we're saying is, remember I was saying about the interest rates and where we're buffering at. Expectations are driving these things. So it's kind of, we're in a buy the rumor, sell the fact scenario, meaning that the consensus is lower yields, rate cuts are coming up, and we're going to hear about it if they don't pull the trigger. Well, once again, expectations, they've been diminishing as far as whether or not we're going to have a trigger pulled today. Most likely it's going to be the next one or the next two meetings sometime, and then factoring in pretty much right now they have it between 1 and 3 cuts between now and June, especially leaning towards the latter 3 meetings. Is that possible? I think, is it possible that we do see a rate cut by June? Absolutely, if the economic numbers come in line and actually start to really show that what they've done for the past years was the right thing. Remember that the Fed started out raising rates to curb inflation. If you cut rates, what are you going to do? You're going to bring back inflation. So that's a very touchy teeter-totter to ride, especially on an election year. Do they want window dressing for the Democrats, for the market? Absolutely. However, that could backfire in this situation. So if we start cutting rates, in theory, they think that that's going to help things and alleviate some tensions. Well, it's actually going to cause inflation, especially in the real estate market, because now the people, let's say that they cut rates by upwards of a full point between now and the middle of the summer. By the end of the summer, you're going to be 2 basis points back probably in pricing on mortgages. That's a big deal. It's a big savings on what people could or couldn't have bought and sold, and also how their financing is impacted. That's great, but then, okay, so now you can finance at a lower rate, but now that people are going to be able to finance at a lower rate, there's going to be more sellers, and they're also going to be asking for a higher price. So you're going to have inflation. So even though you have a deflation in the cost of borrowing, you're going to create an inflation in the actual cost of the actual home and the real estate that you're purchasing. And it also will carry over into other things as well. So inflation is something that nobody wants to have come back. And like I said, if they start cutting, we're going to have inflation. It's going to shake up the markets in other ways. All right, so as far as this head and shoulders, because of Fed time, unlike the dollar index, now remember, the euro is the biggest driving force, the dollar index. It's actually been trending lower, not very severely, but it has been. So it made a lower move low on Monday. Now we're coming off of it. Today you can see we actually came back today. We sold off nicely. We came near that low from Monday. We bounced. We're obviously positive on the day. I think as we come into the Fed number, we're going to be pretty much where we're at now to maybe even coming back to where we open and be unchanged on the day. Once, let's say that the Fed doesn't do anything, then the expectations will be now obviously pushing out towards the next meeting. So that means you might actually see the yields go higher just in the short run, meaning because they've been driven up so much by this expectation, especially if there is a cut, that they're going to definitely continue to go lower. And right now, if we don't get the cut, then there's going to be, obviously they're not doing anything for at least a month and a half. We'll probably see rates go up slightly. Remember, they are coming off of being historically very, very low, and even still. So, but when they came back in October, we are now back. I think it's around 1% to 1.25%, depending on what bank you're at, as far as financing for a 30-year. That's a big deal for sure, especially in 6 months, or less than 6 months. So we'll see how that pans out, and if yields continue to retract and get lower, well, then this head here will be higher than this within the next month and a half. So that we are probably in a very good buy zone. So I would say look to buy the breaks, because right now we have been correcting. We set a nice low. So if you want to get low against the get long against the low from Monday, that's a good area. I'd be careful, because there's probably a lot of sell stops just below that, and then we could come back to try and test this low from a couple months ago. Then I think we're going to find support in a big way. For the mere reason, once again, is I don't see them, unless we have confirmation of some real true dovishness. The hawkishness still could be there, and that expectation will definitely have a little bit of a pullback on the euro. That is significant because until the euro starts to feel free to break away to the upside as a bull, meaning that the U.S. is very dovish, we're going to have probably a big range trade for the next like 6 months, meaning that we're probably going to see the euro. Let's take a look at this on a monthly basis. And this is big to think about because you have to have your expectations in line. Look at what we've been doing. You can see this right here. We've been going sideways between 105.20 basically and 111.70. So basically in a $6 range for the past, let's see, this goes back to January of 23. That's a big deal when you consider the trends that we've had overall over the past couple of years. So the key is, are we going to break out of this range? I don't know about that one. I would be very careful. We'll have to see, once again, who reacts first with the central bank. So it's Fed day. I know you guys want to hear some signals and you want to start hitting the trades, having some trades, but guess what? It is what it is. I can tell you right now, we can go down to even the 5-minute on an intraday here. We have a short-term sell signal. Yeah, you know what? I'd be very careful selling the euro US dollar right now when it was just came off of almost making a lower move low, didn't, bounce strong and made a higher move high on a 3-day basis. We could still take out those highs. So right now, short term, now once again, this sell signal here, that goes in line with we're getting back to Fed time. So right now it's 10:05. In the next 2 hours, you might see it get from this right now 108.59.60 area right here back to about 108 even 15. It may come back down here. Very likely that it could. But then the number's going to come out, and then it could shoot up. It could shoot down. Remember, algos are going to kick up. Volume's going to be thin and sporadic. There's going to be lots of vacuum pockets. So don't get caught in this market unless you really have a longer-term stance and also know how to manage your risk on this trade, because here's the hourly, excuse me. The hourly here, we can see what kind of action we've had today alone, okay? This is a lot of action. The number hasn't even come back. We could trade between, just let's say we trade between 108.05 and 108.60 around where we're at right now. Let's go up to 108.80. In this 80 pip range here, you could see that this currency literally just jostle around in a big way, and you could see the median of the range right here. And that's probably going to be your gravitation point today. So be very careful. If you want to do it, I'm not just like I'm not going to tell you what position to put on. I'll tell you what, one thing I will do is give you good advice on when not to trade. And unless you really know what you're doing or you have a very long-term positional stance and are weighing that risk today, stay out until tomorrow, at least until this evening. You know, let the market settle down and absorb the Fed meeting, because it's most likely going to be a non-event. Non-events can be some really wild trading because the algos, no matter what, it's free and clear then. They know there's not even going to be really any leaning on the Fed until Powell speaks in a week. So that's going to be the first time. Remember, the coil has been winding up. It's got to break out one way or another and at least get some kind of action. And if it doesn't, it's just going to churn and whip around. So it could be a range trader's dream and a trend trader's and a swing trader's nightmare. Just nightmare. So I'm just giving you the odds of how these things work in situations like that. And I watched the spreads in the futures over the past couple of days. We've had some good moves from Monday and Tuesday's trade and even into today. They're done. I'm not saying we're not going to have another nice move yet this week or even Thursday and Friday, but right now I would say it's just not worth it for you, you know. All right, so now we're going to take a look once more. I'll give you some levels though. All right, so should we get a rally? Okay, we're trading at 108.58. So in the euro, I'll give you a number here. We could get up to every bit of 109.88 to 110 a quarter in that area. Okay, so that would put us 109.88. So right around up in this area here. So we could challenge this area where the high of the shoulder was. So for a short-term breakout to the upside, without any economic numbers or confirmation to actually give you follow-through, which we would find out over the next couple of days. This is a good area to shoot for a rally. Is it going to happen to the Fed release today into tomorrow? No, but could it break out to the upside over the next couple of days? Absolutely. That would also be a trade that goes with the trend. Okay, so buying dips right now, playing the long side, is a good way to approach the euro US dollar right now. Being a seller, you got to be very, very careful here, at least until you have confirmation. Now, once again, if yields all of a sudden take a big reversal, if all of a sudden you see the short term start slamming to the downside on the day, and then also follow through tomorrow going lower, meaning lower prices, higher yields, well, then we could see this euro US dollar take out the low from Monday, and then I think you could get it down into this 107.45 to, what is this, 107.14 area. So that would be a good place to drop down to, you know. So if any of you guys have any questions about that, feel free to ask. Right now I am going to go on to the British pound US dollar. All right, so this is another one. Let's see, we did have a 5-minute signal here. There's no sell signal on this one. It had a nice rally today. We had a nice intraday move, but in this one's gravitating back just like the other ones. Like I said, be aware that this is typical behavior. So, but I'm not saying right now ride that back and sell, like, you know, the pound or the euro to try and get it back to where it started out today. But because it's already done its retracing, it could stop where it's at and start to flatline. You know, we're coming into that. As we get towards the Fed, it just starts to wind down and just start to get narrow. You know, think about it like an EKG. Is right now we're about to go to flatline going into that 1:15 number Central Standard Time. You know, and then that gives us 45 minutes before the Treasury market closes and an hour and 45 minutes before the stock market closes. So that is going to shake up some things because we do have the stock market up near its highs. We do have, once again, you know, where the yields are. In fact, that's a good thing. Why don't we just check real quick? This ES. Yeah, S&Ps are just off their lows. They're not hammering them today, but they're coming off of new highs set a couple days ago. So let's see, the high on Monday was 49.56 even, and the high yesterday was 49.57 quarter. Okay, so yeah, the high was set on Monday, and they came near it yesterday and fell off of it. So that must have been right after the intraday trade, and now you can see that they're lower on the day. And that's a big expectation too, is that the market's overcooked. We had this little gap here. Powell's got to look at that one, being like, okay, so if we have the market on its highs, if we start cutting rates, what's that going to do? The market's overheating, and then you're going to bring back inflation. Well, then they're going to have to flip right back to hawkishness. At least that would be the only thing that makes common sense, you know. So because otherwise they're defeating the purpose of everything that they set in motion and are trying to achieve by rushing into the shortening of rates, or cutting back of rates for shortening the yield curve. We'll see. You know, I'm not saying that intelligence prevails on the right thing or the wrong thing, what the Fed is or isn't going to do, but the transparency has been very solid, and that's the first time in my whole lifetime, let alone historically, they have been this clear. So if they continue that pattern, which right now there's no reason not to, and remember the BOJ, the Bank of England, and which is the BOE, and also the ECB, the European Central Bank, those are all central banks that are going to start to do things too. So it's not just us. So the question is, who reacts first? Who's going to set the tone? I once again think that we're going to be doing nothing. So very careful. Make sure you pay attention to these things. All right, so back to the pound US dollar. All right, so pound US dollar, it is wedging like all the rest you can see on a daily basis. This one, once again, if there's any currency pair out there, wait for a move. Like, there is nothing here you can see right now as far as this had a buy signal that was set back in November, and it's been going sideways since December, okay? And especially as we head into this Fed meeting, it is just winding its coil. Just by attrition, we could be going flatline for the next couple of months. The BOE and the Fed are probably going to be, of all the central banks, pretty much acting about at the same pace, meaning that the Bank of England's probably not going to do very much except follow the Fed. So if the Fed does nothing, if they're going to say they're leaning towards dovishness, they could be doing some type of quantitative easing kind of thing. That's a possibility before they actually start to cut rates. Also, you got to think about the relationship with the pound and the dollar, and versus and also the dollar versus other currencies. With this expectations of the Fed cutting rates, the value of the dollar is expected to decrease versus most other currencies. Okay, so that already synthetically could impact them in ways that they don't have to do anything. Okay, if that makes any sense, meaning that the dollar's already had such an extreme move. Once we do flip that curve, meaning that we are going dovish, no longer hawkishness, with an expectation of at least a 6 month to 12-month time frame of managing that dovishness, well, that's big. That's when the dollar is going to get hit, because long-term perspective will be that the dollar is going to be weak. So meaning that you will have, if they want pound strength, which right now they actually may, okay, just for in certain respects, does it hurt their export or their exports? Absolutely, but then their imports, that's something that's more, I think, is more important to them on the pricing to help curb inflation for them. So we'll see how that pans out. I would be aware of that. Remember, it's not, when you trade currencies, it's not just the U.S. that you have to focus on, especially we're talking about the pound, you got to talk about the ECB. We're talking about, or excuse me, the BOE. If you're talking about the euro, like we just talked before, then you talk about the ECB. When we get to the yen, obviously BOJ. Okay, so we have that going for us. Remember, once again, if you haven't hit that subscribe, follow button, please do it. Hit the like and also a share for us if you do not mind. We would really appreciate that. And by the way, I haven't put this up there. I'm going to put this in the chat for you. This is a free link for the Forex Trading Unlocked newsletter that is on LinkedIn. It costs you nothing. All you got to do is sign up, and then when we send out special emails on LinkedIn with special analysis videos, private things we do just for LinkedIn, and also other content for the Forex and derivatives markets. It's a great newsletter. We don't hammer you with it daily, hitting you with multiple things all day long and pushing, all kinds of stuff on you. That's not what we do. We provide content for, like, links to this video. If you missed it today, we'll have it'll be in our newsletter so people will know about it. And there are certain offers that we have for webinars that we have. Most of them are free. And then also other information and links to resources that you may find useful in your trading as you move forward. And that's for all levels of traders. It's about beginning to advance. This is not all about any type of get-rich-quick stuff, because that doesn't exist. There are no systems. There are only methodologies that work. I can tell you that from 35 years of experience. Anyone that tells you any different is lying to you. They're just pushing some sort of, if you break down the numbers, you'll see that they really don't care about your success, because they actually make money off of you losing money. I know that doesn't make any sense, but that's actually the case, So, and I'm doing this for free right now. I get ads, but I'm not making any money off of this. Just promoting Forex Trading Unlocked so you can see our resources. And then if you want to subscribe to our paid newsletters and things like that, you make that choice over time. You'll see if the tools that we give you for free help you, then you'll see if the ones that we charge for, and also we don't hit you over the head and have any lock you into things like others do. There's no pressure. There really isn't, because there shouldn't be. You'll grow at your own pace, and we'll help you do so. Remember, the markets are always going to be here. The question is, are you? The opportunities are always there. Do they have every day at every moment? Absolutely not. And anyone that tells you there are, and there's every day you can do this and whatever, that's an outright lie. It just is. It's nothing but selling you air and garbage. So on that note, back to our numbers here. So for the British pound right now, we have nothing. There is no signal. We have no confirmation of anything. Once again, as we go into Fed day, Fed time is always the hardest time to speak to people, because everyone says, where's the trade? Well, you know what? You got to wait for the market to come to you. You can look. It doesn't take anyone that has much knowledge of the markets to see this thing is going nowhere. It's going sideways. We will look again here. I'll show you once again on the intraday, like we had the euro that have a short-term sell signal. This is pulling back. I think it's just going to do like I told you. We're gravitating back towards, where it started out today. Will it get there? I don't know. Maybe not. Maybe not. It wouldn't be surprising if it did. It's a common occurrence on Fed day. Okay, so pound US dollar, we got nothing right there. What I could do is, I could give you, if there's a break, the key is 125.94. I'll give you that level right here. So 125.94. So 125. There we go. $125.94. Okay. So think about that, which is basically where the low was set here back on that was the 17th on the 17th of January. If we take out that low, and that's also a key pivot level on a monthly basis, that would be a good chance that you'd see the pound actually break probably all the way down to the 23 handle, 22 even, 22 half. And believe it or not, that would have a nice, I could see that coming out. Is it going to happen? I don't know. I mean, right now we have came off this higher move high, higher move low, higher move high, higher move low. That's why that's key. If we take out this low, you know, this will be the major one here. If we definitely take this one out, then I would say look out below, brother. It's dropping. But yeah, from here just to there, that's a nice shot because that's what? That's 120.590 down to 125 even. So you're looking at almost a dollar break if we take out that low. I don't think you're just going to tip, you know, just spike down into it a little bit, dabble, and bounce back up into the range. I think once we take out this upward sloping support and especially this key low right here, you got a good chance of seeing at least a dollar move to maybe even $1.50 before it starts to stabilize. And then maybe set a trend rally, a trend pattern of being in a sell rally forecast, continuing to break lower and lower over the next, say, month and a half or so. Once again, we have to see if the Fed intervenes. All right, let's go to the U.S. dollar Swiss. You want to talk about some action today? Look at this. Well, we had a nice swing high a week and a half ago. We had a nice sell signal here, bearish engulfing line. Speaking of bearish engulfing line, if you are familiar with Japanese candlesticks, some people like them, some people don't. Some people say they work and they swear by them, and others say that they don't. Well, I wrote a book on it, and it tells you all about how they do and also don't work. So most people don't use them correctly, and that's why they have problems with them. Visually, they're great, even if you don't believe in how they work, because bars are usually harder to see, and it just visually things jump out at you. The patterns do work. It's how you use them. If you're using them on intraday time frames right now, and this is key for you right now. This is in the book. You can look it up. If you're using Japanese candlestick patterns on anything lower than a 1 hour time frame, they're not going to work. There's not. If you say that they are, I'm telling you, you're delusional. They may work at times, but they really don't. There's too much noise. Hourlies in liquid markets, in their certain situations, if you're usually trading with a trend trade or a daily trade, using that to work with a trade, sometimes they work. I'd be very cautious with them. It's better when you're using the daily, the weekly, and the monthly. And the thing about them is that it's not about the initial bang for the buck you get for them. It's the tone it gives you, because you can set a trend. So right now, for instance, with this one here, we had this sell signal, and this is a great way to tell you how to use this. We can just use basic Fibonacci. Now, this is what I'm using here with you. I'm not using what I use in the book. But let's say we go down to this low right here. All right, so from this low to this high, last swing low, last swing high on the trend. Let's see, as a retracement, as a correction, today we took out the 0.618. We didn't make it to the 50%. Okay, that's kind of a key area. This right here is a good bottoming area. So as a US dollar Swiss trader, if you want to know how to trade this one, and a really great way to trade it today is trade the breakout of today's range. Okay, this market has been trending. You came into nice support. The overall trend is bearish. It's in a corrective rally. Is the corrective rally over? I don't know. We'll see. This swing high is very key right here. It fell just short of this downward sloping resistance line, okay, keeping this channel going lower. That is key. We're coming down, and as by attrition, we're coming closer to it too. You haven't sold off very much, but you did come into a key Fibonacci area, correcting area. Now, technically, we have a buy signal that was triggered here. We have this sell signal that was triggered here. Fibonacci way already has us into a good area where it hit. Can it go lower? Yeah, it can get down to that 50% level. It can get even further. You know, it's not that it can't do that. The overall trend, though, that is a trend trade. So that one's going there. We have a confliction with the technicals, though. So because of that confliction there, and then also we go back to what is the Fed doing, okay? If the Fed does nothing and it pushes out the expectations of being dovishness, well, it's going to be more likely that this market's going to go sideways. It could start to go a little bit lower, and the trend may continue to be lower because the expectations are dollar weakness overall in the long run. But if nothing's being done, and especially if economic numbers can come out to continue to start upticking inflation, well, then the expectations don't matter because the realities are going to be what the realities are. If Chairman Powell comes out next week and says, hey, everybody's getting a little ahead of themselves, we eventually will cut rates. However, economic numbers, blah, 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 where they have been coming in line, now we're starting to uptick and show signs of inflation again. We need to watch to make sure that inflation is not going to kick its heels back up and be fueled by especially a rate cut. Okay, so if that speak comes out next Wednesday, then, or excuse me, next week when Chairman Powell speaks, and if that tone is there, well, then what are you going to see? Well, then you're going to see this market rally. You'll see dollar strength come back, and then you'll see what is now a correction here continue to go higher. Are we going to go all the way back up to this area here? Probably not. Especially because no matter what, I mean, think about this. This is from October. This is back when the yields topped out. Okay, now they've been trending back. Okay, with that expectation is going to continue. Very likely, this high is set. It's locked in. So if you want to know as far as how high this correction can get, well, then we'll go to here. So let's say, oh, and here, look at this. Wow, Fibonacci. So remember how we said today on the daily basis from this low to this high? Today's low is right in between the 0.618 and the 50%. Well, look at what here is, 0.236. This is a big harmonic, okay? So from this high to this low, we came just above the 0.382. We topped out, and then we had this bearish engulfing line. Now, this is a high probable Japanese candlestick pattern, which, by the way, I wrote a book called High Probable Japanese Candlestick Patterns. It's available on Amazon.com in Kindle and paperback. And in this situation, by the methodology, you would have sold it after the next day. You would have been getting short this market, okay? Looking for it to get down to a little bit lower than the low where it is today. Because it already poked into that 50% marker, you would already be having a break-even plus a profit stop in. You would have been risking the high from back here, which was the day before the signal had come off. Okay, and this is going counter to this buy signal here that was triggered on another technical thing I have. With this technical system, I don't only use in tandem with other things. I don't just take every buy and sell signal. But I do like to know when it conflicts, because in a situation like this is where I go with the Japanese candlestick pattern. That's when typically there's a high probable chance that this signal is more solid than this one, even though this is the one that looks like it wants to break out. Okay, back to that. So today we hit the 0.236. This is huge. We came off this, we bobbled through here, so we know that this is big support, meaning that if we can stay above this here, especially if we turn around, let's say that all of a sudden this market gets back to even on the day and settles slightly positive on the day. That would be another Japanese candlestick pattern that would form. We'll have to tell you about that in another video, or you can read the book and you can find out what it is. That would be a short-term stopper on that one, meaning that odds are we would be planting a low. A lot of times on Fed meetings you can have that. Never try and pick a top or a bottom, but there's a lot of times where around Fed meetings, whether they do or do not react, that you come into a pivot point. Okay, could it be today or tomorrow or right around this to the next couple days? Yes, it may be today, especially if they don't do anything, okay? So that being said, we can see this market then lift, okay, on an intraday basis and get us back up to, I would say, at least around here, which would be the 0.382, challenging these highs. Remember, this sell signal already got into its area. We already have an adjustment already on where you're going to be short from, okay? Profits in. If it reverses, it doesn't necessarily make it a buy, okay? However, it's very likely that, once again, if the speak comes out, like I said, next week, and especially if today they do not cut, that the low is set today, we're going to probably see resistance get challenged, and there's a good chance that you'll see the US dollar Swiss take out the high from a couple weeks ago. But we'll see how that goes. But right now, we don't have a signal, but it is forming. Now let's see what happens, because what happens if today all of a sudden, boom, this market's up off of its lows or makes new lows? We could still get down to that 50% level from this short trade. And then what happens then? We take profit, baby. That's what we do, because that's how methods, that's how you make money in the markets. You stick to your entry level, your risk, you manage your risk along the way, following, never being subjective, always follow the rules. So that's the rule right now. We're looking for that. Once again, we get down to that 50% mark, boom, it's out. Actually, it's a little bit different, a couple ticks different than that, because in my methodology, we don't just use the 50%. There's actually an equation from the entry price and the high. It comes close into that area, but if you want to know the actual pricing on the entry and the stops and how to do that, you got to buy the book. Or you can read it on Kindle. If you're a Kindle Prime reader or whatever, then you don't have to buy the book. You just go in there and you look it up and you can read it. It's with your monthly fee or whatever. So, which is an option for you. I prefer if you buy the book, though. So, all right. So that's it with the U.S. dollar Swiss. We don't have any questions in the chat room, guys. All right. So you guys are obviously listening. Once again, we have a couple new watchers there. If you haven't hit the subscribe button or the follow, the share button or the like button, we really appreciate it if you would. And leave some comments in the comment section and what have you. Remember, we posted those links for the free newsletter on LinkedIn and also for the book, High Probable Japanese Candlestick Patterns. All right, now speaking of Japanese candlesticks, let's go to the U.S. dollar JPY. All right, U.S. dollar JPY, slam a jamma today. Now, this is the one that's looking good on the sell side. We had this buy signal that was triggered weeks ago, and now we took out 2 days ago this upward sloping trend line. That right there kind of broke that trade out. And then today we took out the swing low, as you can see here, from a couple days ago. And that right there makes this market look pretty bearish, especially even unless we actually were to raise rates or lean towards any type of speak like that. It's going to be hard for us to get back above this 150 level. The Bank of Japan, no matter what, is leaning towards doing some things that would strengthen the yen slightly versus the dollar and keep us from pressuring these highs above 150. The only way you're going to see the U.S. dollar yen get above 150 and hold above 150 most likely is if we see a tremendously big rally in oil. If we see oil get back to, say, 95, $100 or more a barrel, then all bets are off. Then on that trade, even I'm getting long the U.S. dollar yen, and I'm just staying long on it. Because typically when you have oil get especially above 100, that really starts to weaken the yen because they don't produce oil. They have to import oil no matter what. So the currency relation, the conversion on buying the oil plus the price of oil tends to weaken the U.S. dollar yen relationship, especially. Remember, the Japanese buy a lot of oil from the United States, so that impacts that currency relationship. There is that much money flowing. But we have a nice sell signal today. Now, what the market does have with the MACD setting up for a sell signal, technically, we don't have any high probable Japanese candlestick patterns, though. But today, you can see how this market hit some nice resistance. We're starting to set this nice little trend channel to slope it down. The low here, once again, was taken out today. I would say watch it. If we could settle where we're at right now, or at least somewhere below no matter what this low here, that's a good indication that we'll probably see some follow-through tomorrow to the downside and maybe even into next week until we hear from Powell especially. Now, remember, all currencies don't. There's days where they trade in tandem, and then there's days where they don't trade in tandem at all. There's different relationships, and once again, like I was talking about with the yen, oil is a huge impact when it comes to the fundamentals with the U.S. with the yen, okay, and especially with the dollar yen. So does that mean it's the same impact as with the euro when oil prices go up? Europe has to buy oil too. But does it affect the pound? No. British Petroleum is one of the biggest oil companies on the planet. So and they drill all and produce all kinds of oil all around the UK. So they have no want or they're not worried about oil when it comes to that. They have the resource. So that currency is not influenced so much by it, as far as like especially a pound dollar. Now a pound yen, because there are transactions that are done in other currencies, not as much, but what have you, those do impact those FX pairs as well. So take that into account when you're trading, especially like the US dollar yen. Do you have to watch oil on a daily basis? No. Do you have to be aware of certain trends? Absolutely. If oil is dropping big in price and you're short the US dollar yen, you're typically riding those fundamentals are going. They're working together. Doesn't mean that just because oil is dropping, you short the US dollar yen? No. But if oil is dropping and trending lower and you have a signal that says short the US dollar yen, then you have a technical and a fundamental that line up. Anytime you can line those types of things from completely different methods, that is a good probable chance that you're going to be on the right side of the market. And I mean, you never know, anything can happen, but that's how you make money trading, is to restrict yourself from over trading. Think of it like as a solid poker player knows that you don't play too many hands. If you play too many hands, no matter what, you're throwing money away. You're always going to be throwing some money away. It's a mistake. It's just you're playing too much. You're losing those. Everything you lose takes away from your profits. So if you don't want to take away anything more from your profits than you need to, don't get in the trades you shouldn't be in. It's that simple. That right there is one of the biggest drawbacks of all failures when it comes to why don't they succeed, is they don't change that. You have to learn that. Once again, if you were listening from the beginning when I said earlier, pay attention to what you're doing, have discipline, because there's always opportunities in the market. The question is, are you going to be here for it? The market's going to be here tomorrow. Are you? Is the opportunity going to be here tomorrow? Not necessarily. Tomorrow's Thursday in front of a Friday after a Fed weekend. Who knows? We could just be digesting everything. It could be doing this, saying this, whatever, or who knows what the media spin is going to be. Everyone could be completely just mind blowing, being like, what do we do with this? We don't know how the world's going to react. That's why I use the markets as an indicator. That's why, if you've been watching this video, why we look at all these other markets, because the best indicator you can have is the market itself. That's one of the biggest questions I always get asked. What is your key indicator for the markets? I'm like, and they're like, well, actually, I don't have to worry about giving you the secret sauce recipe, because it's right there in front of everybody. It's the markets themselves. Are they going to fluctuate and what have you? Yeah, absolutely. Are they always going to be in a tandem with whatever in direction you're thinking of? No, they are erratic on any given day. However, there are trends and turning points. Once those are established and you can see those trends, you can see how they actually are trading together or not, and that's when you know which way to go for directions. Like, for instance, yesterday was a day where the spreads were out of line in the futures between the short terms and the long terms, and when you have a relationship that's that strong and it holds for an extended period of time, like it's one thing if it happens over a few minutes and then snaps back, but if it's holding on an hourly basis and stretching and stretching and stretching, that within the next day or so, on that day, you have a nice trend move going typically, and that trend move is something you can jump on, and then once that spread starts to come back into place, then the momentum shifts. So that's where options trading gets into. That's why you gotta love derivatives. There's so many ways to trade direction or non-direction, and as you grow as a trader, and also knowing those aspects, it's like I tell people, knowing the FX markets can make you a really good options trader, and you don't have to trade the FX markets at all. you can, if you know the options markets especially, you don't have to trade them. They can help you in a lot of markets, especially even currencies, believe it or not. So and as you grow in trading, and as you expand your knowledge, you'll learn these things. Anyone that's out there listening that's not a beginning or intermediate trader, I'm sure would be like, yeah, he's telling you the truth there, and that's exactly how it works. It just takes time to develop those skills. You have to focus on one market first and get used to the techniques, and once you do that, then you expand what you look at, and then once you start getting used to looking at more markets, then you start to interpret, what do those markets do, what is the relationship. Real quickly before we move on into some levels here for the yen for you, I'll give you one last key bit of advice that from the trading floor that I learned. Especially I was in the S&P 500 pit for the most part. When I first was down there, within the first couple of years, I was thinking one day, I'm like, we got all these boards all surrounding the whole trading floor. We're in this one quadrant for the S&Ps, and we see these boards, and we have New York, we got the Board of Trade stuff up. So in the S&Ps, of course, we had all the interest rates from the Board of Trade, and then we also had the currencies that were also at the market displayed. And I was looking, I'm like, we got all these numbers, everyone's focused on this one. But, I'm like, are they trading these? Or is there a relationship? And I started to watch it, and I started to talk to people who actually did trade spreads and all these intermarket relationships. And most people focus on one market. When you start to look at those other markets, it's not necessarily that you have to be active in them, but to be aware of them. It will help shape the dynamics of your trading, and it'll help reinforce when you're doing the right thing. And a lot of times what it will do, which is the best thing, is it will keep you from making mistakes. And it will keep you from making trades that you should not take. Okay, and that's the key to trading. It's like I always tell people, getting in is not the problem. It's how you get out. So it doesn't matter what your method is, what your system is, or what have you. Getting in, ultimately, how you get out is going to determine whether you're up or down and how you manage that. So, and if you keep those perspectives in line over time, you'll be able to take advantage of the opportunities when they come, which you find when you have these intermarket relationships. All right, so I babbled enough on that. Let's give you the levels for the yen here. All right, so for the US dollar yen, we know that 150 is going to be a big buffer resistance, and right now, unless we have anything that says that the Fed's going to lean hawkishness, odds are we're probably going to get a little bit of a dive in the next couple of sessions. I think we could get the US dollar yen probably the 145.09 area. So we're trading 146.24, a little bit more than one more full basis handle. So that's a good move. 100 points, 100 and some points, around 100 points of a break that you could probably see. And at that area, that's when you have to be careful, because from that 104, so basically 146 even, that's a big monthly directional pivot level. So between 146 and 150, which you can see actually, if I throw in this line here, 146 is basically right there. The bulk of the trading since August has been trading in this range. We tried to get up. That's the hard part, is getting above 150. Extreme volatility here. Look at this on a daily basis. Look at this kind of a volatility that we had back in December. This is when other markets weren't moving. So it was weird. The dynamics of January were really messed up. Markets tend to go out like they come in. Okay, meaning that when they're going sideways, they're going sideways. When they spike up radically, they typically come back on a steep slope as well. They don't typically just go flat, go straight up, and then go flat, and then go straight down. They don't do that. They typically there's a rhythm, and right now when you're sneaking along like this, it's not doing much. There's not high waves, and then all of a sudden, boom, you spike high, you spike back low. Doesn't mean it's equal, no, but you do have that kind of volatility, meaning like here, severe slides, a lot of volatility. Look at this on an intraday basis. Boom, 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 boom. Plant the low, scream all the way back to, not all the way back, but to the key resistance area here, which is pretty much where it's in here, where it came into. And now we're falling off of it, gravitating once around this point here. And this seems to be the inflection point. So key dynamic here for you bears. If you're short right now, well, especially with the number, be careful. Keep it tight. But if you survive the number and this stays where it's at here, if we get below this 145.90, basically 146 even area, yeah, that's a good trade. I think you can get down to 144, 143, literally, probably sometime now. In the next 2 days, probably unlikely. But by, say, next Tuesday, Wednesday, Thursday of next week to get down into that area, very, very probable chance of doing that, especially if there's any continued easing on yields, pressure on bond prices, that would put pressure on the dollar and also give the bears for the U.S. dollar yen a really good chance at catching further move to the downside. And the money is on the downside. I mean, from right now where you're at, look at this. We're trading just above 146 even. How much money do you have to play with there? To the long side, it's going to be tough to get it just above just to get it to 149 and make a higher move high on a weekly basis, let alone get above 150. Okay, and you're only looking at how much you're going to make, a potential of $4. Maybe, because above 150, it's going to be really, between the Bank of Japan possibly intervening and the fact that the fundamentals just aren't there, or technicals, if you get up there, it's going to spike. So you're going to better take a profit, have a target up there to get out right away. Now, to the downside, we could very easily, like I said, get down to the 44, 43 handle. That's 2 handles within the next week. And also put it into an area where we could grind lower. We could get down to 142, even 141 area, especially because that would go with the narrative of shorter of the cutting in rates, and yields going down. If that scenario is where the speak goes, especially next week, think about that. Remember, let's say the dollar stays pretty flat. This market here is set to break after Fed Day, at least for a couple sessions. Let's say we close below 146 and we get down to, say, 145, 144 area by, say, next Monday, next Tuesday, okay? What does that do for us? That puts us in a situation where once Powell starts speaking, if it confirms, if it goes with the narrative that, things are going to start cutting, and then all of a sudden the expectations of a cut definitely by May and 2 by June or 3 by June, well then, that's the bears are going to have a field day. It's going to be a sell rally forecast. You'll probably see the U.S. dollar yen get all the way down to the 137, 136 area over the next month and a half or so. Now, it could even happen. That could easily happen within a 3 to 5 week, 6 weeks tops time frame. That's not a big move over that amount of time. It could happen, if Powell actually came out and said that stuff next week, something along that narrative, then it would probably happen within the next 3 weeks. So a lot more potential to the downside with this currency. I would just be careful being a bull. Now, I'm not saying there won't be some good buying opportunities. Once again, once it gets down to that 144 to 143, even 142 area, if Powell sticks with, like I said, this narrative that, hey, economic numbers are starting to uptick again for inflation and blah, 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 and the stock market's on its highs, he's going to be very hesitant to say he's going to cut, and if anything, say, hey, I don't want to spoil your party or anything, but if we have any strong indication that inflation's coming back, we're definitely not cutting, and there may even be one more quarter point hike. Could be, So I mean, you heard it here first. I've been saying it since October. Don't try and pick a top or a bottom in the bond market or with the Fed. Everything's lagging. Remember how I told you I use the markets because that's in real time. Every indicator out there, every system out there is lagging. It's 100% lagging. It's a matter of how much. Okay, and when it comes to the economy and as far as inflation and all these things to impact, from the macro to the micro level and what have you, and also and vice versa, that takes time, and it takes time to know what these numbers are. You're not going to know how much inflation you have next month until after next month has happened, right? So we've gone through the fall, we've gone through the winter, fourth quarter. Now we're in the first quarter of 2024. We're in earnings season. This is Super Bowl time for the market. Market's on its highs. I just beware. I would not I would not throw out the possibility. See, the thing is, there is no factor right now. If you check the CME and everyone's consensus that tracks the Fed, there is a 0% chance of a rate hike on the table. I'd be careful with that one. I'd be very, very careful with that one. I'm not saying that they're going to do it, but it doesn't mean that they're even remotely set to start cutting, because it goes against their narrative. Cutting rates is only going to bring back inflation in the environment that we're in right now. So it defeats the purpose. Why would you cut rates? Why? Because some people think they can finance their mortgage a lot better. You're already getting at a point or a point and a quarter better than you were back in November. And guess what? Reality is, historically, I know people say, "Oh, they're so high historically." No, they're not. They're historically low. When I was trading the Treasury bonds, they were trading in the 80 handle. They were trading, $160 lower, $170 lower. That's $170,000 a contract lower. That's a big deal in the bond pricing, and that was when mortgages went for prime credit were going off at, say, 8 to 12%, and guess what? I hate to tell you, 8 to 10.5, 11% is actually fair interest rate for someone with a credit, because there needs to be a risk pattern coverage involved there, and a lender needs to make money. Why would you lend money out at 0? Would you? I mean, just think about that. Next time when people talk about where rates are and where they should be, and historically they're not even close to being high. That's for sure. And that's in my lifetime, not even just my lifetime, my trading career. Okay, so, and you can bank on that one. As we're talking, US dollar yen is getting towards those lows again. We are now 3 hours and 25 minutes away from the end of the Fed meeting for today, and also until March. So, all right, so we gave you the levels for the US dollar yen. We got a couple of you guys watching. Let's keep on going. Let's go to the Aussie dollar, US dollar. This one here broke out by attrition. You can see this right here. This market's been going sideways, digesting. It's holding support here. It tagged this upward sloping support line here, keeping the correction bottom intact. The question is, if we take out this low here today, that is a very good chance that this market's going lower. Otherwise, we've rounded in a nice area here. Could it be more sideways in digestion? Very likely. But if you do see dollar weakness coming into play, well, then I think you're going to see this market break out to the upside. How much? I would say you probably have a good chance. Let's see. If the upside on the Aussie, we have the levels here. Yeah, 67 to 67.40. So kind of in the right around here, 67 to in between here and 65 even. So somewhere right in this little zone right here, which is about 50% correction from this high to this low. That would be a good just target area for it to digest some more. And unless, like I said, we have true confirmation of dovishness on the Fed, it's going to be hard to hit the dollar. So there's got to be another reason for dollar weakness or Aussie strength to command a rally to continue. And the fundamentals economically for Australia are in the gutter. They're just atrocious. So commodity pricing, too, is another thing that's throwing them off. Demand from China is throwing them off. Those are big factors that weigh on the Australian dollar currency, not just versus the dollar, but just in general. So my expectations are, after the meeting today, is that you probably have a good chance, like I said, to get up to 67, even 67.40 half area, and then digest, and we'll see where things go, especially where yields start to trend. Technically, right now, this is still in a sell signal. I think it's over. It's setting up for a buy from this sell signal here. It's pretty much, yeah, it's running out of gas, and this is one, once again, that I take with incorporation with other things, and right now I would not be short this market right now. Not that it couldn't go lower, especially if you take out these lows right here. But right now, there's no reason to think that much dollar strength is going to come into the marketplace. Now, if all of a sudden you see the bonds sell off big, in a big way, if you see the dollar index all of a sudden bounce and start rallying hard, well then we have a totally different situation, because then we'll probably see this low to get taken out and then get down to 65. So basically you can see where this low and this high is here. this is the area where you'll probably see some support. I don't see it getting really hammered unless you really were to see the bottom market. If you started to see rates really go up, like where people are like, oh, wow, Powell's not going to cut rates until September with his speak. He may not raise, but he's not going to cut rates until the fall. Then you're looking at election time. You're looking at 9-10 months out. You're set up for range-bound conditions no matter what, even if your expectations are for lower interest rates, which if they're not coming until then, well, we pretty much will probably have seen probably much the extent of the pullback as far as a softening in yields. So we'll see. A lot to find out over the next couple of weeks, and especially after today. Today's Fed meeting is a key meeting, no matter what they do. New Zealand dollar, US dollar, pretty much same situation as the Aussie. I would say that with this one here, as far as levels, yeah, fundamentally, technically, the whole thing is the same ball of wax. This one here, it touched already on good support where this bottomed out here. This is a big swing low. I would say key off of this, especially for your risk. If we fall below this, yeah, around 60 even. I got this area, which puts us just like with the Aussie, around highs like this and this low. So somewhere in here to the downside. As far as upside, it's really tough to be a buyer of this one unless you see the dollar just get crushed. It is set up right now. It's oversold. It looks like this correction, I mean, you're coming off of a higher move high. Longer term, we're coming off of this higher move high, higher move low. That's why this is key. If this is the case and we're going to resume the major trend up, if this is the channel that we're at, well, then you can see, like I said, this low's got a hold, and then, well, we could grind higher, but I just don't see us, by attrition, we're going to take out this downward sloping resistance. Irony of it all, we hit the high today. But there you go. If we break out today, if we could close above that today, I think short term you can get, like I said, just with the Aussie, you're going to get it up into this area like this. You're probably not going to get a lot of follow through. So expectations, be careful with these markets, my friends. Now, US dollar Canada, this one's going to be an interesting one. US dollar Canada. All right, so this one, as you can see, fell off to the downside. Now, interestingly enough, we came off this lower move low. We made this lower move high. We made this higher move low, lower move high, set for sideways, but then we took out this low. We came down to it, and then what do? We hit on this key support here. Basically, this is kind of a range trade area that I have the Canada in between, was this 35.63 and 33.60. So basically a $2 range, which we tagged the low nicely today. Technically, it's already in a sell situation. We have this, the MACD is looking to sell off. We're already in the middle of a break. We took out the lower low, or the higher move low after a lower move high, which is an indication of neutral to bearishness. This one here, US dollar, this is where we're at that inflection point, which is, like I said, with what Powell said. Remember, I said earlier that around Fed meetings, you have a lot of times where sometimes it can accelerate a trend, other times it becomes a very pivotal area, at least in the short run. We could be doing that today, meaning short-term strength in the dollar coming up over the next few sessions. Does that mean that I'm bullish the dollar? Absolutely not. I just think that the dollar has been beaten up a little bit. Going into this meeting, it was either sideways, look at the pound, where that was. The thing was going sideways. This one, you could say it has too, but it's been swinging around at least with some sort of a trade on a weekly basis, unlike the pound where you're just getting, any swing trader and looking for a breakout or even trying to buy into the lows and sell on the highs, you're getting crushed. You're not getting any follow through, that's for sure. So, and you're probably getting edged out by stops just getting nudged with higher move highs and lower move lows by just a tad. So this one, nice buying area. Let me give you some numbers here. So for the US dollar Canada, let's see what I got. This, let's see, 133.60. Yeah, that's the top. So yeah, 133.13. But yeah, I don't see it falling below one. It could, if we take out this low, I don't see it getting below 133 even. I think this low that was set here the other day is pretty solid. I don't see it getting below that. Whoops, let me raise that up a little bit. There we go. So that should hold there. Yeah, if anything below that, if we were to take that out, well then look out below, because then my next big number would be taking out this low here. That would be, or this one here. That would put you down to 131 even. But Now, if dollar weakness really comes into play, this trend is going to continue, and then you can see that happening. But like I said, I think short term we're going to see it bounce. We'll see maybe it come back to the middle of this range. Remember, we have this downward sloping resistance line. Let's see if over the next couple of days we get above that. If we can breach that, we still got this 135.60 area to cross. And here's where this is a pivotal area. It gets up for a couple of days and it swings. But this could be our new chop around point, is up here, if you see dollar strength. So I would be careful about seeing any extended follow through to the upside. Bearishness, if anything, I would look to sell rallies. So maybe not necessarily buy, look for to buy into this move, but if it comes up into this area, let it digest, let it come up in here, and then look for selling opportunities up in there. So anyhow, let's go back to the Euro US dollar where we started. Okay, that one is, yeah, it came back nicely. If you were with us since the video started, we're getting right towards that opening price of the day. Let's go to the Dixie, and there we go. We're a little bit higher than when we started the video. So interesting Fed day. Thank you very much for watching, guys. I got something else for you I want to give you real quick, and that is just in case, if you want to check it out. I'm gonna put this link in the chat for you. All right. Every week I have, besides the free newsletter on LinkedIn, I have a newsletter I put out through tfnn.com, which we did a show today. And if you hang on for a minute, I'm going to give you the link for that too. Okay, so the Tiger Forex report has a 30-day money-back guarantee. And we cover all the markets that we just covered today, so on a weekly basis. Now I'm going to give you a link to today's spot. Every Wednesday I do a spot on TFNN. And let's see, 31st, here we go. Okay, so I'm going to share this with you guys right now. All right, so the first one is, we got you the Tiger Forex report, and now here is from today's show. So after you're done watching this video, you can check out, this is only 10 minutes. Every Wednesday morning at 40 past the hour, I do a segment for 9 minutes with Tommy O'Brien on the TFNN show. We talk about the currencies, crude oil, interest rate futures, and a couple other markets, and just things in general that are going on in the marketplace. And then also, you know, obviously any trading signals if there are any. So check us out. That's the video link right there on YouTube. So hope you guys enjoyed the video today. Remember to check us out at forex-trading-unlock.com, and we have all kinds of resources there, tools for you, and accesses to links and certain things that we have available for your Forex trading needs. So I want to thank you very much. I'm Teddy Kekstadt from Forex Trading Unlocked Incorporated. You guys have a wonderful day, and we'll see you soon. Have a good night.